Hi, everyone, and welcome to this week's installment of Mish's Market Minute. I am your host, Mish Schneider, and I always like to start out by thanking my friends at StockCharts TV. Hopefully you all watched the pitch that we put out the other day. I gave you 5 stock picks there, along with my very esteemed colleagues, Joel and Katie Stockton. And so I'm going to add to that today because the market is at a very interesting spot. As we know, we are looking at new highs in NASDAQ, new highs or close to it, or actually new highs in the S&P 500, while IWM lags, although in a bullish phase, and the diamonds are actually still really lagging in a warning phase. And then, of course, if we take a look at the rest of the economic modern family, they're doing okay, but nobody is doing as good as, when I say nobody, I make them human, as NASDAQ stocks. So that got me thinking the market breadth is a little bit weak right here, but there are still areas that have already been beaten up that might actually do well. And considering that we just had potentially an infrastructure package passed as we speak by the bipartisan team that was working on it, which is very exciting and something I really hope continues to move, I thought would be a good day to cover 4 different areas of focus. Some will be a little bit repeat, but some I haven't talked about in a while. So the 4 areas of focus are healthcare, cannabis, telecommunications, and transportations, with a particular focus on the last 2, more related to this infrastructure package that could actually work out well. Healthcare is something that's really also been very interesting. So we'll take a look at some of the stocks in that. And of course, cannabis, which was basically the whole area beat to a pulp, has now set up with a potential bottom. So we'll take a look at some of the stocks in that as well. So let's go on. As you know, I always like to give you the actual stocks that I'm going to be covering. You can see what I'm going to do with healthcare here is I'm actually even going to include one animal healthcare stock. I'm not going to read these, but they're up here in case you need them if you want to go review. Okay, so let's start with the first symbol, Teladoc. And this is a repeat from what I did with the pitch the other day, earlier in the week, because it's such an interesting stock. As you can see, this was what I call the pandemic darling, because it made this huge move up from the fall all the way to its peak that it had in February 2021, and has done nothing but go down since then. And now what we're having here is an experience where it came up on my screen for 2 reasons. Number one is I actually really like the idea of a virtual doctor, number one. Number 2 is it has a phase change in that it's cleared the 50-day moving average. And when I talked to y'all on the pitch, I said that what we needed to see was, since we were already seeing a positive divergence on real motion when it cleared the 50 long before price did, that we needed the confirmation in price, and now we have it. 2 closes over the 50-day moving average. I'm still a little troubled by the negative slope in the 50, but again, we always have to be very, very careful about risk reward. So taking a look at right now, it actually today, Thursday, has triggered the buy with breaking out of the previous day high, confirming the phase change, and also breaking out of that 30-minute opening range. And you know I'm a huge fan of that. You've heard me talk about it over and over and over again. So what would you be risking at this point? What we do is we generally take the low of the day. It cleared the major moving average. So in this case, the low of 57.07, put a little fudge on it. And if you would have ended, let's say at 163, so now you have a $6 risk. If you entered at 163 and you have a $6 risk, what does that mean? It means you're looking for $12. So that would put you at 175. So 175, I like that, is very reasonable because it comes in right here on this day, on the day it gapped lower and tanked. So that is still very much in play here. And if you are interested in that, it is certainly not too late. I wouldn't let it get way more extended than that. Now, of course, if this winds up filling the gap, then I think the next place we would be looking at would be the 200-day moving average, but let's not get ahead of ourselves. The next one is a stock that I know Millennial Partners was interested in, and actually it's just breaking out actually now that I'm talking to you about it. And this is GTHX. This is G1 Therapeutics. I think they're working on sickle cell anemia and a couple of other cancers. But if you look here at the chart, you've got just now crossing on the real motion of the 50-day moving average as it's confirming in the price on the 50-day moving average. Now you do have some resistance up here at 22.87. With so close to resistance, I would probably say it behooves you to maybe wait till about 22.87, take out, or let's make it a nice round number at 23, because this high here was 23.09. And then this really looks like a nice strong bottom. Your risk, of course, would have to be right under 21. So if you're going to risk $2 on this trade, that's not crazy, because remember now you'd be looking for $4. So that means you'd be looking for like 27, which is pretty much right around these highs right here. This high right here is actually 26.69. So figure 26.50 to 27 would be a good first target. And of course, if we get through there, this thing can go much higher. This peaked out here at this level at 37.07. So I like this one as well. Now, another one that is a much more conventional play in healthcare is United Healthcare. Now, this one is not as interesting to me as the first two I showed you. And that's because even though we have an upward sloping 50-day moving average, we're still below it. And if you can see, we're pretty far from the 50-day moving average in real motion. Momentum is not great. However, if it can get through two closes over that 50-day moving average and your momentum can move up past the Bollinger Band, then you might have a relatively low risk play in a very good stock that not too long ago was traded up to close to 425. But again, not my favorite. Now, this is fun. Let's take a look at pet healthcare. This is a thing. More and more people are buying pet healthcare because, as you know, going to the vet can be really, really expensive. So what we have here, though, is a very different kind of trade in that this is a momentum trade. Why is it a momentum trade? Because you could see it's already starting a move to the parabolic. However, it's consolidated in a range. It's pretty far from its moving averages, so that risk becomes completely null and void. And of course, if we go down to momentum, even though it's sideways in momentum, it's still strong. So to me, when you're looking at momentum plays, you want to make sure you clear certain levels. So to me, what the best level for this to clear would really be maybe around this high here, 187. As I'm talking to you, is trading at 185.89. If it clears 187, you really want to have about as tight a risk as possible. I would say somewhere between 183.50 and 184 would be a reasonable risk, because now you're risking $3.50, let's say, to make 7. And with this type of stock and this type of move up, there's no reason why this couldn't go up to 192 or even higher. And then the last one in the healthcare I wanted to show you is Honor. Now, Honor probably should have already been bought, but it's really not too late. You can see here that it didn't have a divergence. When this broke out over the 50, so did the stock. So your day to buy it would have been this day right here. And now, though, it's just getting going. So at this point, you got some pretty good resistance here at 70. So what I would do is play this one of two ways. I would either wait for a move somewhere around 67, a dip, which it actually came to on Thursday, buy it at 67 and then risk under the 50-day moving average, or perhaps wait for 70 to be taken out and then lower your risk, raise your risk to like under that 67 right there. So you'll risk another $3 to see if you can get through that 200-day moving average. Momentum is good, but no divergence here. And again, you can see it showing leadership. So that's that for that space. Next one, now we're going to move over to cannabis. Full disclosure, we got into this stock yesterday. It's a relatively new issue. This is the pure US cannabis ETF. I have traded Canadian cannabis for the last several years, so it was nice to get in something that was more United States based. You can see that we don't have enough information for real motion, but we are looking here at this bottom leadership, and it's just now starting to go in line with the benchmark. But let's go back to here. You can see a 200-day moving average is starting to show up. And again, those of you who listen to me week in and week out know that I like a new 60-day low when the next day it confirms by closing higher. And so it was Wednesday of this week that we actually got into it. However, at this point, since you're looking at this video for the first time, we do have a slope that's starting to neutralize in this 50-day moving average. So at this point now, if you get two closes over that 50-day moving average, then you would simply use the low of that day as your risk with a little fudge and see what she's got. Because I do believe that even though I wouldn't say this is bottom, because you can see if you look at some history, it was way lower than that. But I do believe that this has not only an opportunity now to take all this work and blast through it, possibly getting through this level right here at 44, but I think that this actually has potential to go much higher over the longer term. Now, if we go to some of the Canadian stocks, this is CGC, Canopy Growth, and they're calling it a healthcare pharmaceutical. I love that. But again, we have not cleared the 50 and we have not cleared the 50 here either. That makes this write it down and put it away until not only the momentum clears over the 50, but that also the price clears over the 50. Once again, you want two closes over 25. And then if you get those two closes over 25, you use the low of the day that it cleared that blue line. Okay, so you'll see on the symbol list that I have Afria, but we couldn't find it on either TradeStation or StockCharts. So we're just going to skip that one and go to Tilray, which is a stock that I've talked about with you probably several times through the last year or so that I've been doing this. And what's interesting here is, again, we're not quite through that 50-day moving average in momentum, but we're getting close, but we're through the 50-day moving average in price. So it actually confirmed yesterday, and today we're getting a little bit of movement, but it's kind of sloppy. And if I blow this chart up a little bit here, you can see that this level at the high of the day I'm talking to you has some resistance if we go back not only to this high, but even if we go back to this high. So I'm going to say at this point to be a little bit more conservative with this stock. I would be looking at it to clear 1863, which today's high was 1868. So let's call it 1865 to 1870. And then you could still risk to underneath that 50-day moving average, probably maybe under 1680. So that's not a bad risk for this stock, even though I don't like risking very much on these smaller price stocks. But we know that if this thing gets going, it's also been a meme darling, that this thing can actually really get going. So it's probably worth maybe a smaller position. I still like the CGC play better, to be patient for that, or the MSOS if it gets through the 50-day moving average. And the last one in this space is Grow Generation. This has been a hot stock. When it gets going, it gets going. Now, again, you can see that this really also has cleared the 50-day moving average, while the momentum has not. So we still need to see a little bit of catch up here, which is why you're seeing this interesting candle where it made a high and now is selling off a little bit. And if we examine that, basically what we want to see is a close over this level, or a close over 45.35. A close, and when I say close, that means you watch it the last 10 minutes of the day. A close over 45.35, and you can actually put in a risk under 40.50. So you're basically risking about $4.50. Making $9 in this stock is nothing. You can see just where my cursor is, this $10 higher up at 54.55. So that would be another one. And I would assume if it can clear that, we're going to start to see some positive momentum there as well. Okay, so let's move now into telecommunications. Another stock that we're in, and we just got in on Thursday, day I'm talking to you, is Viacom. Now, we've been in this stock before. We did phenomenally well in this stock. I don't know about you all, but I tend to like to trade the same stocks over and over and over again when they set up. I miss sometimes some, but other times, like I did the lipstick trades for you a while ago, Estee Lauder set up today. That's not here. I'm not going to show it to you. And then it had set up before we got out, and now a new setup. And the reason why I like to trade the same stocks over and over again is that if they're good stocks, they will set up again. And number two is that you learn the personality of the stock. And what I've learned about the personality of Viacom is this: it consolidates and moves and moves and moves, and it can ignore the overall market. And this also could benefit from the infrastructure deal. Remember, we were talking about that. So this not only confirmed over the 50-day moving average, and we're getting a positive momentum now here over the 50-day moving average, but here's your 200-day. So it's got a lot of room. It's starting now to try to pierce it. At this point now, I'd like to see maybe two closes. See, we had one close here and then it failed. Here we had an attempt, but it never closed there. So two closes over this 200-day moving average, which is at 42.98. So it's playing a little bit above now. You can use today's low, which would be 41.69 as a risk, to see now if this whole thing is setting up as a new base, and can we get up closer to 48? I think we can. And so we'll see what happens there. But I really like this one. Another one I know I showed you when I did the whole idea of infrastructure a while ago was AMT, American Tower, particularly because of the 5G. And I hope some of you bought it, because this thing went straight up. When I talked to you, it was trading around 240. It's gotten up to 270. Now it's been consolidating since then, waiting for the infrastructure package. So we have to trade, once again, this a little different. For one, you could see the momentum broke down under the Bollinger Band. So I'd give it maybe a day, maybe wait till Monday, or maybe not, because who knows what could happen on Monday. But I like it around 262. So maybe I would be wanting to buy a dip somewhere around 262. The low day of I'm talking to you was 262.39. And if you can't get in because it doesn't happen, then I would probably get in somewhere around 266.50, and then risk to today's low of 262.39. So about a $4 risk, because you want to see if you can get up to new highs in this one. And I believe that you can. And when I say new highs, I'm not looking at the weekly chart. It might have been up there. I'm talking about new recent highs. Okay, CCI is another one. Crown Castle. This is a REIT. Some REITs will benefit from the infrastructure package, also the telecommunications. And so in this case, you've got, again, another kind of momentum play, although it's waning in momentum here. So I'd be a little patient with this. I'd like to see what happens if it gets closer down to around 193, or at this point, you have to clear these highs at 200. And the reason why I'm saying that is because you see this day, that was a new high, right? 199.22. Let's just make sure. Yeah, 199.22. And then it closed below it 2 days ago. So that means now you're having a little bit of a reversal pattern. So I would like this one better on a correction, but it's always good to look at all the setups so you learn when to trade and when not to trade. Now I added T as a telecommunication play. This has been beat up, kind of like Viacom was. And this one, like Viacom, made a new low, but more recently, and then confirmed as a new 60-plus day low. So this is actually setting up right now, but I'd like to see some confirmation on this. So I'd like to see this take out 29, and then you can use a risk to under here, which is 28.41. That's a very good risk. That's really a 60-cent risk, but the stock is not very volatile. Now, if we get down here, it's definitely under the 200 in terms of momentum. So at the same time, when it clears 29, you may want to have a check if you have the ACP plugin for our real motion indicator to see if it's taken out the 200 there, and then I'd feel much better about the trade. Next one is Comcast, another telecommunication. Now, this is a sloppy chart. So this is one that I would say avoid. First of all, you did have a new 60-day high here, and then it looks like it may have made about a 10% move already. So that's not really a factor anymore. But your momentum has gone way down while this is trying to tackle the 50-day moving average. So I'd want to see at least this momentum maybe get back above right here, this low right here. See that? If the dots get back over there, that low, That would be a good sign. I would also, of course, want to see this clear back over the 50-day moving average for 2 days. This is sloppy, probably requires a little bit of room and some patience. I think we have better ones. But the other one that is kind of looks a little bit to me like AT&T is Verizon. And considering I'm about to go to Verizon, get a new iPhone, the company has obviously telecommunications and a part in the infrastructure package. So again, a new 60 plus day low, closed above it the next day, setting up good with an inside day on the day that I'm talking to you. Momentum is basically in line with price, so that's not a factor. So what you want to do here, my suggestion would be to get in over 56.50. Not that far away. If you can, risk to under 55.50, that's $1, and then see if you can get this up to, I don't know, clear all of this work, all the moving averages up to around 58 or 59. But I like this stock too, because you have such a clear defined risk. All right, let's move to transportation now. Let's start obviously with IYT. I've been talking a lot about this particular sector because as you can see, it's under the 50 with NASDAQ making new highs. When this breaks down, I take notice. Dow Jones Transportation Index goes way back to Charles Dow. It's nothing new. Basically, it makes a lot of sense. If you want to see how strong the economy is, you want to make sure that goods are moving. So trains, planes, automobiles, but also infrastructure. So this thing came all the way tumbling down, made a new 60-day low and reversed the next day. Good sign. So at this point now, what I'd like to see is these most recent highs taken out. Well, let's call it 262. And of course, it has to hold here 254.65. If it gets through 262, then I'm going to be looking obviously for the next place to clear, which would be the 50-day moving average. But you wouldn't have to wait for that. You might want to take a shot over 262 simply because you had this reversal low. Momentum, of course, at least has stopped going down, but it still has a ways to catch up. But more importantly, this is an extremely important sector to the whole picture. We need this to move. What I'm seeing as I'm talking to you is the Russell 2000 now starting to take some leadership back over NASDAQ. That's what we want to see. That means the market is reflecting a healthy economy, which of course could lead to other issues like a rate hike or whatever, but let's not worry about that until we have to worry about that. And then next would be FDX, of course, the biggie, FedEx. Now, FedEx is doing better than IYT, even though it sold off with IYT. It too made a new 60-day low and now is back over the 50-day moving average. Didn't confirm though, because yesterday it didn't close above it. So if it gets another close on this on Friday, over 300, that could be an interesting opportunity. And then I would probably risk not very much, like under 296. Next up, another one, biggie. I talked about this one too when I did the infrastructure one, UNP or Union Pacific. Union Pacific, also a new 60-day low. So all of these stocks that have sold off before the market did have now reversed. So obviously this has to hold here under 214, above 214.51. Momentum is certainly not wowing us here, but that could take a little while to catch up. In the meanwhile, again, simple. Wait for two closes over the 50-day moving average, and then you know that buying is coming into these areas for sure. Two more to go. Next one is CSX. This is railroads. Okay, another one that has sold off, and another one that today is making, but let me just make sure that's a new 60-day low. May not be. Today's date's the 24th. So we have to go back here to April 24th. Yeah, actually, this is a new 60-day low. So that's good. So now that tells you is Friday when you're listening to this video. If you want to get involved in a railroad, all you would have to do is make sure 94.30 holds up and that you want to see a move over 95.14. And the last one here is NSC. Norfolk Southern, same type of situation. See how a lot of these did the same thing. They made a new 60-plus day low, reversed the next day, and are just consolidating. All of these mean that you get such a low risk trade. You want to see this hold 261.31. And you probably want to see this get through all of this here. I would say maybe over the high of the day I'm talking to you, over 266. Good tight risk for a big stock trading well over 200. And I wouldn't wait for the 50. You could do that now, even though we're not seeing the momentum do anything strong. Again, using these 60-day highs and lows are so powerful. Look at what happened here when it made a new 60-day high and then failed the next day, closing under the low of this day. You got a good correction. Same thing could happen in reverse. New 60-day low, closes above it the next day, consolidates, gets through 266, risk to under here, and see what happens. Okay, so there's your 4 areas to look at. Good luck with your trading. Of course, you can always ask me questions on Twitter. And in the meanwhile, you'll have a wonderful weekend. Thanks so much. Bye for now.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.